Good morning, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures, bringing you some commentary here in the energy market. So let's get started. April crude prices are off quite a bit. Right now we're down about $1.18, trading around $36 a barrel. And that's quite a pullback we've seen here. Just back a few days ago here on March 11th, we saw highs of just over $39 a barrel. So we're well off the highs. And one of the things I mentioned here in the last e-view, we talked about taking a look at the oil market here on the long side. And, since the beginning of the month, on March 1st, crude prices were down at around about $33.50 a barrel. So we've really seen prices rally up here into the middle of the month. And now we're starting to see a little bit of that ease back. And I think, when you take a look at some of the reasons why, one, nothing has really changed on the supply side. We still have ample supplies. Last week we saw EIA report. We saw a build of about 3 million barrels. Tomorrow's EIA report is expected to show another build. So we continue to see oil being added here to the overall stockpiles. The only bright spot we've seen on the demand side has really been on the RBOB. Demand is staying pretty firm there. So that's been somewhat supportive of the market. And, we take a look back over, why we saw prices rally up here the first weeks of March. In my opinion, I think it had a lot to do with the talks of freezing oil output. Now, again, I say freezing here, so not cut here, but countries, OPEC and non-OPEC countries, we're talking about a freeze. Now, there's a little uncertainty how Iran is going to respond to this. They haven't exactly weighed in that they're going to agree to any production level to see some freezes there in the production levels. So, I think that's weighing on the market here. I think we're seeing a little profit taking here after the run that we've seen. Short-term technical indicators do appear to be overbought right now. Today's price action, we broke down here below the 10-day moving average. So certainly there's some negative forces at work. In my opinion, I think, after the run up here, it's only natural to see a little profit taking place here in the market. Another bright spot here, you take a look at the Baker Hughes oil rig count. We've seen 12 consecutive weekly declines. So at some point, I think it will start to affect a little bit on the production side. But, nonetheless, I mean, you take a look at the overall stockpile levels, we still got ample oil out there. So, traders, I think you should take a look at tonight's API report. That'll give us an indication of what tomorrow's EIA data might look like. Certainly tomorrow's EIA data, keep an eye on that. There are some key support areas that we're looking at in the market. I think oil prices could come down to. Then I think we could start to see some consolidation. If you'd like to talk about those numbers, learn some more about how you can position yourself, give me a call or shoot me an email. We can get into more details. Futures and options on futures may involve substantial risk and may not be suitable for all investors.